they put out a Q2 report that mortgage applications were the highest in Q2 and originations since 2022. 59% of all refinance activity, which is about 20% of the market, are cash out refinances.
Expanding our money supply because the Fed has been restricted. I'm going to explain that.
Credit card loans, car loans, those are short-term borrowing rates, and they are low right now.
Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending. Existing home sales, 4 million home sales annual rate. That's with a little drop.
Hey, it's KP coming to you live from Rancho Palos Verdes. We're at Terranea Resort. The California MBA had their Western Secondary kickoff today. We had our board meeting yesterday. It was super productive. I'm going to walk through this bar here in a second, and it's a little packed and noisy, but it's about 11 o'clock here on the West Coast, and I know not everyone can make it here to this conference, as conference season really kicks off in earnest. Fantastic board meeting, lots of stuff going on. Obviously, we're addressing a lot of regulation that really impacts the entire country, whether the state's going to adopt a Community Reinvestment Act type legislation next year, insurance crisis updates, AI, having to show AI and show your cards and how you make borrower decisions in your states and how that impacts people. And you have to show how you made it. Does that impact Fannie and Freddie? Do they have to show their algorithms in Desktop Underwriter and Loan Prospector? There's a lot of stuff that we talked about. But the vibe is pretty good here. Attendance is up from last year, and we have some great sponsors. There was a Campac event today, raising some money for us to lobby. So lots going on. It's been a great event. So the Fed will possibly cut, more than likely 25 basis points in September, but we have a huge CPI report tomorrow. So the Consumer Price Index comes out tomorrow, and we're going to find out whether inflation is rising. And the estimates is for 0.3% month over month. That's rising. That's pretty big. And that's part of the dual mandate, obviously. And we'll see if, hey, bud, good to see you. And we'll see if that negatively impacts mortgage rates. My guess is like mortgage rates will stay in like this 10-year yield range that it's been in, down to the 420 range, the Elon line, I like to call that. And so we'll see if that gets broken. Probably not tomorrow. In fact, if anything, if inflation comes off a little bit hotter and it's a little higher than expected, then you might see the stock market take a little bit of a sell-off. I'm not a financial advisor, not responsible for your losses, only profits. But, the market is kind of up and down, up and down. It's choppy. We're in a range. Rates are relatively low, but this inflation report is by far the biggest data point. And it's not as important of an inflation read as the personal consumption expenditure, the Fed deflator, but it does come earlier because we don't get that until the end of the month. So what is going on with inflation? 90-day reprieve on the China deal, terms relatively to say the same. Nvidia and AMD have to pay a 15% tariff now on chips that have been green-lighted to sell to China. So the coffers of the Treasury are getting full. It was a negotiation, felt like a New York shakedown. But whatever, Jensen Huang, the CEO of Nvidia, was like, they pay 14% effective tax rate when the corporate rate is like 20%. So if China is more of an open market to them and they have to pay 15, which is negotiated down from 20 by him, 20 to 15%, that's a win. So that means China will be setting up some more infrastructure on the Nvidia software set, as opposed to being forced to go build their own stuff and then potentially win the AI race. So big deal. Gold's no tariff. So the president has come out and said there's going to be no tariffs on gold, which is huge. It's kind of weird to say, but he should say it because obviously gold is seen as a hedge. It's an asset class. It's got 100 years of history within liquidity markets, and that's a big deal as well. Now the Fed fund rate is at 4.375. That range from 425 to 450. Typically, you probably haven't heard this. I thought it was pretty interesting to hear Jeremy Siegel, professor at Wharton, say that the Fed funds rate is typically 125 to 150 basis points below the 10-year Treasury yield. So remember that mark. So they're at 4.375 right now. The 10-year Treasury is at 420. And typically the Fed funds rate is 125 to 150 basis points below the 10-year Treasury yield. So that is a very historic benchmark. Obviously, tariffs are a problem. So far, like 64% of tariffs are being absorbed by, um, uh, by employers. So this tax on billionaires is what's going through right now, like the thing that Elizabeth Warren has wanted for so long. And corporations are paying the freight. Now, that could change, and we could see some goods inflation up tomorrow in the report, and that might freak the markets out. By the way, this is the lobby. There you go. There's a guitarist that just got done playing. It's super noisy in there, so trying to stay out of there. But you know, Goldman Sachs came out with a report and said that the PCE is likely to be negatively impacted by 0.2% because of tariffs at 3.2%, and core PCE 0.66. So if not for oil, being so low because of this administration's drill baby drill policy, our PCE inflation would be higher. Now, I follow Tom Lee at Fundstrat, and he said that in Europe, when they look at inflation, they strip out housing. And if we use the same measurement that strips out housing, which is a huge driver of inflation, which we'll see tomorrow, which is like 40 to 44% of the CPI, we are below 2%. We've been below 2%, stripping out housing. And we know housing has been in a recession. Talk about the soft landing. We haven't been in a global economic recession because jobs haven't broken. But we know housing has been in a recession, manufacturing has been in a recession. So like Kathy Wood at ARK Invest likes to say, we have rolling recessions, but not an outright recession. But we'll watch the labor report. Bill Bodnar over at Tabrasa, he said something pretty interesting. Why doesn't the jobs report wait till the end of the month like the PCE and report? Because if it takes so long to collect data and it's such an important figure, why is it the first Friday of every month? That's a great point. You guys have heard me for years, like the July jobs report. And I say that, and then I say, it's really the second half of June and the first half of July. Well, now what I've been saying all that time, we're seeing it with these huge revisions because only 60% of people are even returning the surveys from the establishment survey. These are businesses, like something like 400 businesses, something like that. They're taking their sweet ass time to report. It's not mandatory. They're not all reporting. They don't have a deadline. And so we're getting these massive revisions later, which is distorting our real-time data. So I don't see that changing. And we have another jobs report before the next Fed meeting, and we could see more revisions. And the trend has been to be lower on employment report data. So, it's interesting to see how that all plays out and how much our markets depend on, employment data, labor over inflation, right? Anyway, other tariff news, on that 90-day reprieve, that's a big deal in China. Our obviously our largest data trading partner. We're going to see how that plays out, and the uncertainty of tariff trade is what has the markets unnerved. Like, is that chip 15% with Nvidia going to change? Is our 90-day reprieve with China, is that going to change? China could ban Nvidia chips. Like, there's just a lot of uncertainty, and that's what always has the market unnerved. Having said that, the stock market's absolutely ripping at all-time highs. Look at Palantir, look at Nvidia, look at Microsoft crushing earnings, Meta crushing earnings. And I just, like, if you've hung out with me for about 8 minutes, just bear with me. I feel like the reason we talk about and have discussions on this chat down below is to talk about math, science, data, facts, right? Not political bias. Could you imagine if your political bias had you afraid to buy a house or buy stock or gain wealth? Like, what did you miss out on? And a lot of what I try and do is discuss things to help us all grow together. And, political bias is hurting a lot of people from deciding to buy a house right now. Now's a great time to buy a house before rates get lower, before home prices ramp back up again. Did you know that since 2022, okay, ICE, which acquired Black Knight, Andy Walden does a fantastic job of putting out data. They put out a Q2 report that mortgage applications were the highest in Q2 and originations since 2022. 59% of all refinance activity, which is about 20% of the market, um, are cash out refinances. How many times have we said, "Oh, no one's going to trade their lower rate for da 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 da"? Yes, they are. They are en masse. They're taking a 1.25% higher rate, taking cash out. The average about $92,000 in cash. They have about $213,000 in average tappable equity of the 17 trillion of equity out there, the 11 point something trillion in tappable, which is 80% of the loan to value. Like, people are refinancing low rates to get cash, and business and originations are the highest they've been since 2022. Rates are the lowest they've been since like last October, certainly the lowest all year. That's fantastic news, positive news. Money in the Treasury coffers is positive news. The stock market ripping is positive news. People are making money. You wouldn't believe it if you read certain news sources or watch certain TV channels that poo-poo everything. People are winning who are in the housing, so we have to let people know and get the word out. That's all. I mean, I could talk about cocoa prices in the Ivory Coast being, elevated because of rainstorms, and I can get all kinds of other stuff. But it's a tough time of the year, but things are good and rates are trending down, even though tomorrow might not show that. But we're gonna get below that Elon line, that 420 10-year Treasury yield, if there's more weakness in labor, which is more important than negative inflation data. Okay, you guys want to see this poop show? So this is the 11 o'clock crowd. We have an 8:30 gun time tomorrow, and here's where it's all going now. Chris Carson, hey, Danny, Christmas, Danny, Michael, Archibald, Melissa, we're getting after it. What's up? What up? So it's a little crazy. I had not stepped into the bar yet. I had not. Well, hello. Hi. Yes. Oh, hi. Whoops. Having fun, and we'll get one last guest appearance from someone who never. If you've made it 12 minutes, I promise I'm almost done. The ghost, my partner in crime, Gary Malice. Oh, don't you hide. Don't you hide. My partner in crime.
Oh, don't drag me into this.
Gary Malice had the 4 o'clock, the first panel today with 4 other esteemed colleagues, and we're all just chilling here. What's up, Roy? This is Dave Pistone, the man, the myth, the new res legend. Okay, that's it. Have a great one. Cheers.
Hey, it's KP coming to you live from Corona, California. Just did a whole 15-minute video, and the audio was terrible, so I got to do it again. So I'm going to do it in 10. That's what I'm going to try. It's 12:45 a.m. After midnight on Thursday, going into Friday. So we're Friday. Just got back from the California MBA's Western Secondary, easily a top 4 show. I'll give you a little recap from there that I thought was pretty good. Jamming here with my new Sennheiser Longhorn Burnt Orange headphones that my partners, Paul, Robert, and Gary, got for me. Totally not fishing here, but it was my birthday yesterday. Leo season is still going. Got to go see T-Pain in concert and win some big-ass stuffed animals for my kids. Dude, hat tip to Susan Milazzo, 22 years at the helm over there at the California MBA. We have a great Empower movement, and lots of women in banking and women in mortgage and lots of women group. And I don't think Susan gets enough credit. She's got to be like her and, Miriam and Gary. I mean, these are like some of the longest tenured CEOs, high-powered females in our business at the highest level. And so thank you, Susan, for everything you've done. What a great show. Kim Nickel, another great female executive from PennyMac, her and Nick Pabarkis co-chairing, with attendance off the charts and getting some fantastic sponsorship there and putting on an incredible event at Terranea and Rancho Palos Verdes. I think we're there next year again as well. 30 year and a 3-year contract. Alex Bond had a session where he talked to Gary Hall Jr., who is a 10-time medalist U.S. Olympic swimmer. He's the one that famously came out and kissed his pipes. Don't worry, I'm not flexing because I got my first workout in today in 9 days. Because trust me, I felt a little weak. But after 3 nights of dinners and boozing and networking and all the nicotine habits, and then going to the T-Pain concert, it's nice to sit here and get recharged. And one of the things was, when I was thinking about that Gary Hall Jr. interview that Alex did, his 10 medals melted in his house fire in the Pacific Palisades. He lost his house, and the International Olympic Committee replaced him. And he was telling just stories about, his community being destroyed. He does swim, coaching and lessons and stuff in the community, and all of his clientele, a lot of their houses are destroyed. I mean, it's just unbelievable. Over 100 of his 150 clients, their families are all displaced. Just an incredible story of grit and determination. He's so grounded in faith. And I was like sitting there thinking, like, you know what? This is one of my favorite jackets. I'm going to just take it off and go give it to him because I'm sure he needs like some new clothes. Shout out to Tom James, Blake Albano. I know you're out there somewhere. But then he stood up. Gary Hall is gigantic, so it totally wouldn't fit. It was a nice thought. Mitch Kiter from Kiter Brodsky was up there with Indira from KP Consulting, moderated by Susan Milazzo. And my big takeaway from Mitch was that there's only 50 enforcement people left at the CFPB. So, kind of reinforces the thought that states will step in. And speaking of, when Indira was talking about the legislative rundown in California to steal my University of Texas slogan, "What starts here changes the world," California legislation changes a lot of things, and they're trying to create a community reinvestment act that goes further than, and then, so how do they score it? What's the scorecard? How do they enforce it? There's AI enforcement. What are they doing with insurance policies? So much stuff. They threw in this weird, rider amendment, this bill in the session this summer, which will change the game on second liens, which I'll talk more about that in a minute. So it was a great update. Awesome. But of course, my partner, Gary Malice, who runs capital markets and strategy, he may or may not have not gotten sick at a dinner we both attended. There's some just diseases spreading around, colds and coughs and things, and hopefully everyone's okay. I hope that I didn't hear to anyone else other than people at our dinner. So hope everyone feels better. But Gary had a fantastic session, the first session of the entire conference at 4:00 on Monday after the $80,000 plus fundraiser for CAMPAC. Goes to all the issues. We are an advocacy group at CAMPAC, and the fundraiser coming off the golf course and going to see a session. It was awesome. So took it easy on the golf course, trying to take it easy, even though I didn't work out for 9 days, and I'm supposed to limit myself to 5 drinks per week. You probably just spit out your coffee. I will also give a shout out to Nick Pabarkis at Penny Mac. Congratulations, brother. He is on the ladder. Of course, we know that. He's on the executive committee. So he is in line to fall behind Gary Bechtel and, of course, to Wes Isley, to be the vice chair of the executive committee. So really, really cool stuff going on there. Okay. What else? PPI, CPI, kind of a big deal. Is the Fed going to cut? Lowest rates all year, lowest rates since last October. Those were the headlines that were coming across on my email. So what did CPI and PPI do to mess that up? Consumer price index came in less than feared, 0.2 headline, 0.3 core. And 44% of headline, and by the way, that's not the preferred measure of inflation. It's the personal consumption expenditure, aka the Fed deflator, that comes out later in the month. But about 44% of it comes from shelter, of which 33%, a third of the whole thing, comes from owner's equivalent rent. So I got caught up on my MBS highway videos, and they did a good job pointing out that a third of that number comes from a survey. Remember the jobs reports that got revised down because of weak and lagging survey data, and how they always get revised down because of the QCEW when the states report back, and we get more revisions. When we had like 880,000 jobs revised last year. So owner's equivalent rent is you call someone and you go, what can you rent your house for? Unfurnished and without utilities. And had to Dan on that line. It's pretty funny. And so this was my thought, this independent thought. These are the same borrowers that are listing their properties for sale now too high because they think their house is worth more than it is, and they're having to have all these price cuts. So why would we trust that data for our shelter owner's equivalent rent information that has high CPI, which causes the bond market to go crazy every day? So hopefully the BLS, the new head, AJ Antoni, will get in there and clean that data up as well in some form or fashion. And also don't forget something I just remembered that a lot of that rent data has a higher weighting as of last year to include more single family rental information and data, not just multifamilies like apartment complexes. So again, that's more data coming from places where people in a survey are saying, yeah, I can rent way more than I think I can, or I can sell for more than I think I can. Not very scientific to have that kind of survey. We can do better. There's Truflation report. There's all kinds of data that's out there. I mean, you can literally look online and see what things are renting for and just do math, but whatever. PPI came in super hot, 0.9% on the headline and the core reading, like 3.7 and 3.2. I don't have the exact numbers on headline and core. So why didn't the bond market freak out and rates just go off the charts and have to go into higher coupons and expand the rate sheet? Because the components in the producer price index that are tariff related were not that high. And you guys know I pay like a stupid amount of money for subscription services information to try and make money in the stock market. I am not a financial advisor. I am not responsible for your losses, only your profits. But Tom Lee from Fundstrat broke down that PPI report: machinery, cameras, photo equipment. That's not consumer tariff related. But what is, if you have a financial advisor, those costs are up. But they're up because the stock market is up, so they're charging more for the gains and your account's growing and all that kind of stuff. But if you took a 12-month annualized pace of that number that came out in the PPI report, 72% price increase in a year, yeah, that's not happening. So the bond market didn't freak out. So they're waiting for Jackson Hole next week. Is the Fed going to say anything? Is Chair Powell going to say anything to move markets? PCE is coming out next week. The stock market, is ripping and roaring. I'll get to that in just a second. But, if Chair Powell doesn't cut 25 basis points in September on the 17th, I'm pretty sure Trump is going to go nuclear and do everything he can to try and fire him, or at least make a big spectacle of it. Or, as President Bush would say, nuclear. And anyway, Powell, his scorecard on bonds and stocks. Remember, you invest in stocks to make money, to risk making money. You invest in Treasury bonds, not to lose money. How are Treasuries and stocks doing under Jay Powell? Well, while he's been in office, negative 15.7% return on your bond investments, and like 95 or 98.5% return on the S&P 500. Shout out to Mizuho for that great data. Check them out. They've got good stuff. So, yeah, I don't, the board's being reshaped. You've got some dissenting. Clearly, with labor over inflation, that's basically what we're seeing. With inflation being here and kind of hot. Labor and labor is a big deal. We lost a lot of jobs in the last report, and as Barry and Dan and the team at NBC Highway pointed out, 260,000 jobs were lost in the jobs report. 1.9 million in the last several months. That's according to the household survey. So that's someone, you call on them and they say, yeah, I'm unemployed. You can't muck that up, right? Like either you're employed or you're not, right? So I know the irony of trying to state a stat from a survey after I just said that they suck, basically. But 1.9 million jobs that are continuing unemployment claims. The jobs claims data came out today. It's 12 months in a row over 1.9 million. So it's a soft labor market. And if we have a soft economy and soft labor, and everyone's coming back from the AI summit, and everyone's talking about AI, and Rich Serbinsky put a pretty funny post that, executives came back from the AI summit and started firing all their staff. That's not obviously the point of AI, but labor productivity is a big deal, and AI will definitely cut into the way we think about labor in the coming years. Certainly has already. I would say that the Austin Goolsbee who kind of got beat up for saying, well, the unemployment rate's only 4.2%. Well, it's actually 4.248, so just a hair away from them rounding up to 4.3. But people leaving the labor market because the border is closed and there's less immigration does not mean that, a 4.25, call it, unemployment rate, um, it still is kind of glossing over the fact that we've had hundreds of thousands of jobs lost in the last couple months, with more revisions to come, I'm sure. And continuing unemployment claims staying elevated. That is a soft labor market, and the Fed has a right to be scared and potentially think about cutting 25 basis points. So what's coming around the corners? Let's peek around the corners, as Stan Minimal would say on his book. Great title. He's a master at that. We have this Russian-U.S. summit in Alaska, where Putin and Trump will talk. Maybe they can see Russia from Alaska. I don't know. Will they get that conflict resolved? And now that oil comes in the market, will oil go up because there's a storm in the Gulf right now, Tropical Storm Fernand? Will it turn into a hurricane? It's not projected to, but the peak hurricane season's coming up. You get these spikes in oil prices when refineries and derricks and stuff go offline because of that weather. And so what else is coming around the corner? We have a budget shutdown, potentially a government shutdown September 30th. If they don't get a continuing resolution or a whole budget again for fiscal year 26, they'll probably just do a continuing resolution into December or even into next year. So we'll see how that plays out and that shakes out. Recession talk still on the table, although we haven't had one, so we're soft landing territory for 3 years plus. But slowing growth obviously could be a catalyst to get the Fed to cut rates. We have some, the Fed meeting is obviously huge. Jackson Hole, I mentioned that. And, again, maybe the Fed doesn't care about 3% inflation. So, because labor is taking precedent. I hope my audio is working. I hope to the Lord above that it's working. Let me check my notes with you real quick to make sure. Yep. Lowest rates of the year. Gotta love that. Commercial real estate. Remember how that was a big black swan event, peeking around corners? Commercial real estate has rebounded in a big way. They're up 45% in the second quarter versus the second quarter last year. So a lot of these things that we've been fearful of aren't really coming true. That doesn't mean there's not bad news on the horizon, but the stock market typically gets choppy between now and October. This is the most hated V-shaped rally in stock market rally ever, according to Tom Lee, and I agree with them. So I don't know, what's going to cause the choppiness? I'm sure there will be some. I am not a financial advisor. I'm not responsible for your losses, only your profits. I have to say that because I don't want anyone taking my stock advice and going YOLO on Bitcoin and Ethereum and financials and small caps and all the Mag 7. I didn't give you any advice there. But good luck getting your kids back to school and all the parents sending their kids off to college. I know it's a sad time in the houses. Have a great weekend. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.